Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just reviewing again the opening range initial balance for the beginning of the month and the beginning of each week on the Euro and British Pound, just to sort of review the last couple months, April, May 2016 on those pairs. Just going over some simple concepts again, just with price based on the first couple of traded time frames within that session. So we're looking at end of day. So we look at the first couple of bars at the beginning of the month, but also the Monday, Tuesday setups as well. And this can be a powerful combination of things, and this can be utilized with a couple of other indicators if so be, but take this and add it into your toolbox. There's some valuable information here, and basically what we look for is the market is usually trying to, the old saying, amateurs open, professionals close. That first couple of traded sessions allows us to have an area now where the market has established itself and possibly a bias, but in a lot of cases the buying extreme or selling extreme for the week. In 80% roughly of situations, one of those two sessions will usually hold as the extreme for sellers or buyers for the week. So let's take a look and see what happened over April and May. Just to rehash, this dark dotted line is the first day of the month, and these lighter gray dotted lines are the Mondays for each week. So just looking at the Euro USD, we're not going to look at any other sort of price action for the moment, but we'll just look strictly at what's happening in this initial balance. In this particular case, the first bar of the month was a Friday. And as I may have mentioned in some of the other videos, I very rarely will ever take a trade off of a Friday. I will wait for the Monday. I'm a firm believer that the market, again, amateurs open, professionals close. I like to see what happens on the Monday. That's the smart money showing its hand. And I firmly believe that if there's a move on the Monday, there's always a second chance to get in on the fill of a gap or on a momentum break. So there's lots of time to get back into these trades. So very rarely again will I trade, so I always let the Monday trade. But in this particular case, because Monday was an inside bar and Friday was the first bar of the month, I would project that across as a buying and selling extreme. Interestingly enough, we saw the market stay range bound, and one thing that's really sort of important about this in this particular situation is that if you notice these candles inside of that first bar, is that most of them opened or closed inside of the middle of the range. Now that's a classic trap that smart money will often play because it traps traders. And in a situation like this where we've got bulls and bears doing battle, traders who enter in somewhere in the middle of that profile or in that range tend to get whipsawed back and forth. So it's really important that if you're going to look to sell and you've seen that range established, that you want to be taking a position selling up here and buying down here. And in this particular case, as we saw the market auction down lower, aggressive bears may have looked to trade that in, and again coming back just to our Monday Tuesday patterns. If we look at this Tuesday low, Monday high, the following week we had an outside bar, and this was possibly an opportunity for traders to look to maybe enter in aggressively to have that bearish move down at least to the lows, but again in this particular case I wouldn't have been looking for that sort of setup. So if we again go back to that first bar, we see the market break out, it pulls back, and again there's our first and second candle into that third week of the month, the high of that second day, the Tuesday, and the low of the Monday. Traders who maybe were looking to enter into that short position off Tuesday's high using the outside candle as their maximum stop loss, or even potentially looking to capture something in that range as it failed at the middle of that range and rolled over. But again, if that market, so we see our first two bars that became a selling extreme for the week. Now, people who possibly entered into that on a break of that, trapping bears, need to understand that they're risking this candle, that full distance candle, hypothetically for that small range right here. Because again, if Mondays are low and that's our buying extreme for the week, that doesn't leave a lot of room for traders to have a nice risk reward. So think Monday to Friday, traders. If you work at the bank or you have positions, most of those traders, even if they're trading intraday, when they leave on they come to work on a Monday, they go to work on a Friday. And so when they come back to work, they're starting from scratch. So if the market establishes a range between Monday and Tuesday, this is why sometimes you'll see that price action fail. Now, in this case, bears who got in up here possibly may have been stopped out again as well. But this offered bears another opportunity for the break of that low on Thursday to trade through to the bottom of the following previous Thursday. So now again, first two candles of the week, Monday, Tuesday, we broke out a range down here. We've come back on the Monday. Aggressive momentum traders would look to trade the break of the long on Monday. Even if you didn't get in on the Tuesday, you could feel confident, even if you traded the break of Tuesday's bar, that because that stayed as a fairly strong bullish candle, if your stop was below Tuesday's low, that you had a reasonable opportunity that this trend was going to continue and at least go back to the high of the previous week, which it did. It obviously auctioned up. Now this is an interesting case in point. The first two bars of the month, coming up after that, we see a break on the Wednesday. If this was a strong trend, this should have continued upwards. That break on the Wednesday allowed bears to trade the break of the Wednesday candle with their stop above Wednesday's high, and they had a nice opportunity. The market retested that and then continued to auction into the close on Monday, Tuesday. So I hope you're getting this basic idea, the initial balance, the first two candles of the week. Again, not necessarily giving a buy or sell signal, but establishing an area of buying and selling where one may hold as the extreme for the week. And this is a great example of that. Bulls breakout on the Wednesday. We know bulls are trapped, but they've auctioned right up to the top of Monday's high. Now, aggressive bears may have jumped in at that opportunity using a stop above the large candle from the previous week. Conservative bears may have waited until Thursday's close and then traded the break. Now again, if you notice with these setups, for example, if you were to trade that candle, okay, it's always only ever one candle stop. So you've traded the break, the market breaks out, your maximum stop loss is above that breakout candle. You know, it's pretty conservative traders. So you know, minimum 1-to-1, but if you're able to spot these opportunities when the timing is there, there's some great high probability opportunities to enter into some fast moves. So we'll take a look at the British pound. And again, just looking back to April, Friday was the first bar of the month, and we had a large breakout on that Friday. Monday was an inside candle. Now, if you haven't studied Al Brooks' trading price action bar by bar, get his books. I'll put the link in the link below. Fantastic information, strong trend, inside bar. Trade the break of that inside bar. The market again auctioned down strongly, took out previous week's low, but again a nice tradable range, pretty much a measured move from the previous Friday's large bear candle. Again, if you're looking to buy low and sell high, here's an example of exiting the trade. And if you look at Wednesday's candle, the market auctioned lower, couldn't get any lower. You might even want to get out at the break of the low. So you've got 1, 2, 3 days of lower closes. And again, Reed, Edwards, and McGee on 4 higher closes, 4 lower closes. Not a common opportunity unless there's a strong move. But again, we're looking towards the end of the week, and as time is running out, traders want to look to maximize their profits. So inside bar, you could exit on the low of that candle or trailing stop, which would have had you taken out on the high of Friday. So coming back to the following Monday, we get a breakout on a strong breakout. Now in this particular case, what I always do is I go to the most recent wick closest to the breakout. So you can see we could have traded off the bull candle from Friday, but that's actually like one big bull candle. So we've gone off the last area where the market found some evidence of selling tails, and the market has clearly erased that. We've consolidated on Tuesday. Wednesday has traded inside of that range. So now we potentially have a buying extreme and a selling extreme, but it appears at this point that they're all inside of Monday's candle. Now aggressive bears may have tried to retest the break of that micro trend line and the retest with a break of Wednesday's low, which again would have given them some profit, but by the evidence of that tail coming off of Monday's open, I'd be a bit hesitant to be holding on to that position. As Friday closes, it stops out traders who have stayed into that position, possibly at break even. And again, we go to Monday's bar, and it's a breakout. So we've got a pretty close test of the bear candle. Again, we've got a bull candle, so it's almost like one big bull candle from Friday to Monday. So that, if you notice, we'll use the smaller line here. Pretty much just closed slightly above the bear candle open from the Wednesday the week before. And that's how subtle sometimes the smart money will play this. So we get a breakout, strong momentum now. And this is a really great example. Again, you'll see this often. 2 strong days, an inside bar. And again, get Al Brooks' books. You want to buy the low of the inside bar. Sometimes you'll get the opportunity to fill the gap from Monday's bar or candle. That's up to you. But that would be an opportunity to enter at a limit order where it fills the gap and have your stop below the low of Monday. So your maximum range still for that trade to be valid is the low of Monday. So use your risk management and position sizing rules accordingly. But again, the market immediately reverse stopped out shorts. So there's another example of trap traders, and then immediately the market taking those stops out. And then resuming the following day after it's auctioned all the way back down again. So traders had a chance to get in twice if they were confident of that market returning up. The following week, if you're out of the market, we've got a break on a gap on Monday's open. Again, aggressive momentum traders may have traded the high of Monday, but now we've got our initial balance, and again another example of an inside candle, except in this particular case the market has auctioned above Monday's high, and some traders would have looked to limit order the high of Monday, which was 45.19, and the low of Thursday only went to 23. So there's an example. Sometimes if you feel like you've got strong momentum, you'll want to be in the market at the best fill you can get, because you may not always get the gaps filled and the limit order filled up. So again, we see the market auction slightly higher. First 2 days of the market, it reverses. And again, here's another example with strong momentum. First initial balance of the month. You have to be aware that you may not get these gaps filled. And in this particular case, I'm not sure if the market 45.76, 45.71. And again, another example of strong momentum in the market not filling those gaps. So the market gave breakout traders another opportunity to come into the market. It auctioned down, a little bit of heat coming back with these buying tails, but the market quickly resumed its selling and into Monday's open. So just closing out, we had again another example of a range. So if you're trading the opening range of the Monday-Tuesday setup, you can see again where the market opens and closes are staying in the middle of that range. And this is sort of an area where you want to avoid until the market gives you a clear opportunity of at least selling in the upper part of the range or buying in the lower part of the range. And in this particular case, The market's auctioned up for 2 days and still can't go any higher. Although we had evidence of more pressure buying up top, the sellers auctioned that back into the selling zone, middle of the range. But again, just to demonstrate, if you look across from the low of that Wednesday candle, this is something else I'll look for. I want to see where all those closes are, and is there one particular candle that once the market auctions up in there, is there one particular candle that seems to be holding, and that's this candle right here. So if you're going to enter into that market short, you want to be using that as your maximum stop above that candle. That's the candle that seems to be holding its own with institution. I mean, some would argue that it's Fridays, but again, I'm looking for where the market's broken out of and that they're protecting that range. So the market gave a nice breakout on the Friday and immediately returned on Monday back into range, and that's a really great opportunity for traders to take the breakout trade. The opposite side is obviously the next place that may be heading. So, again, use that initial balance, the first two candles of the week or of the time frame. If you're trading London, you can use the first couple hours of the London Open. Again, test this with your own strategies. This can give you some great opportunities for seeing where the market may be holding on buying or selling on one side or the other. So I hope you got some value out of today's video. Go back, look at the beginning of the month, look at your ATRs. There's some huge opportunities to time some of these breakout moves and momentum trades when they swing and when they're about to break out. Yeah, so if you got some value, please share it on Facebook. I always appreciate your comments. I've had a few people ask me to go into that a bit more detail. Hopefully that helps. As you can see, in just looking at price, but it does take a bit of time. I've looked at 10 years of thousands of hours of charts. And if you look at this over and over again, you'll start to see the same patterns showing up, traders. But again, nothing's for sure. The markets are random. We don't know the outcome of any one particular trade. So always use your money management and your position sizing. Manage the downside, and may the markets go with you. Stay focused, traders, and enjoy the ride. Thanks. Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.